More of an active investor.
Oh, I'm sorry. I forgot to press the button. Go
Yeah, no
ahead.
worries.
I'm sorry.
So, wanted to become more of an active investor and stumbled upon Pace to see if I can start to, multiply my ability to increase the number of doors I had.
Mm,
And got into sub two. Man, it was a lot of information, right? It was a ton of
yeah.
information. It's great, but it was just a lot. A lot of
Yes.
shiny object syndrome, a lot of trying to figure out what the heck's going on. And stumbled upon Gator as well and joined that and found my niche with Gator. So my
Okay.
background is physical therapy. I'm a physical therapist assistant. I
Okay.
work for a large company. I run a small clinic for a large company. And so I connect with patients, connect with physicians, nurse case managers, attorneys, all different kinds of people on a regular basis. And so,
Mm,
you know, every day as my W-2, my job is to find out what people's needs are, right? Why they're having some issues and try to figure out how to help them, whether myself or connect them with another specialist or a colleague that might have a little bit more expertise in an area that, maybe we're not seeing what I need to see. So I
mm,
decided to really, focus on the connector role within the Gator community. Was out of Gator and Sub 2 for about 7 months because I met some people. We worked on a business venture together, spent a lot of time, effort, energy into that. And so I kind of was focused on that and didn't work out. So we're kind of digging ourselves out of that and moving into different directions. We all decided to kind of just part ways.
mm.
Um, so I'm reconnecting with those that I connected with initially in Gator about a year and a half ago, and then
Okay.
connecting with new people like yourself that I haven't had a chance to connect with,
Very
before I
good.
kind of stepped away into this different business venture.
Yeah.
Um, and
Okay.
so for me, my focus is working with fix and flippers and wholesalers. So obviously EMD and double close as everybody else does, but working with fix and flippers, work on gap funding and
Mm,
helping them understand what they need to present so that a PML such as yourself would be interested and feel safe in investing in their project and helping them understand, hey, these are the numbers that you need to look at, right? This is the number of experience that we need to have. And if you can create a sheet that can give us a big snapshot of what you're looking for, what your experience is, how you can cross collateralize against the project that you're looking for, all those kinds of things to help the PMLs understand, okay, we've done your due diligence and this is potentially a good project for you to go ahead and invest in as well.
yeah.
And then my goal is just to obviously raise capital, have a pool of investors that I can work with. So I have two OG Gators, if you will, that I'm working with
Mm,
that are helping with the deals that I'm bringing in for the deal flow,
mm,
so that I can continue to kind of process those deals and get them going so that I don't get bogged down with it just being myself, right? I have a
yeah.
W-2, I'm in healthcare. I don't have as much time to dedicate to the systems that I need to. So my business model right now is to partner with OG Gators. I'm also in Gator Elite as well. So I was one of the original ones as well,
Mm,
and say, okay, you
mm,
may have some connections. I have some connections. I have some deal flow. Let's work through these together. But it's because it also gives me a better sense of security for the PML that I have a second pair of eyes looking at this deal
mm,
to make sure that that person has, as much security as we possibly can. Obviously, nothing's
yeah.
guaranteed, but
Yeah.
that's been my business model and my goal for the next 6 months. And then after that, it's going to start to build more of that portfolio again.
I got you. I like what you said about your due diligence when you helping the PML, because the PMLs usually don't haven't got, well, they do have time, but the easier you make it to help them do their underwriting, the better, so
Exactly.
and feel
Exactly.
confident. So you see a lot of lazy gators, as it were. They just give you a few lines, So it's nice to stand out from the crowd, and you're more likely to get chosen. Which is
Exactly right. And I had a Gator, they hit a post the other day, and he said, the highlights, hey, this is the amount and it's going to be 1 to 2 months, 1 to 3 months.
mm,
And we're like, how's that possible? There's no way that a rehab can be done and the property can be on the market, sold in
yeah,
30 days.
right,
So I
right,
said, you need to stop putting 1 to 2 or 1 to 3 and just put three, up to
yeah,
3 months, and
that's
and
right.
even 3 months is unlikely unless it truly is a cosmetic flip. In a case, this was what the case was. It's a cosmetic flip. When he sent me all the documents, And he sent me all the information. I was like, listen, now it makes more sense to me that it could be 3 months
Mm,
because it's only really a couple of weeks worth of work
mm.
to go in there. It really is just cosmetic work. But if you don't put that in your post,
Right.
how many people are going to really want to dig in? I don't want to dig in every time. I want you
Exactly.
to give me the highlights and let me know if this is something for me. Because initially I'm looking at that, I'm like, I'm out. I'm
Mm,
moving on to the next thing. I have no time for that. And
yeah.
so I don't know how much he took to it when I got him on the phone
Yeah.
and told him about this.
Yeah. Yeah.
But hopefully,
Very good.
hopefully he'll take it with a grain of salt and learn from it. So,
The other thing I got from your story is you're surrounded by people who are very busy, do have money, and more than likely would like a good way of deploying it. So you have leads all around you as you do your work, which is fantastic opportunity.
mhm,
Because as you can probably know, I'm in the large multifamily space. I started with small multifamilies, made a whole load of mistakes, and wrote this little book, Cautionary Tales from Real Estate Investing.
mhm,
And just a few months back, I found myself in a 3-day workshop learning all about large multifamilies.
mhm,
A lot of it was a reminder, but what lit up for me is that this is my niche. This is where there's a real chance of creating real wealth in a reasonable time period. I'm in my 60s, so I've got decades to build it up through wholesaling and building a business like that,
mhm.
or flipping. So I've done all those things in the past. So um, I'm offering an opportunity for the large EMDs, 6 figures EMDs. We start purchase price around 10 million and go all the way up to 100 million and beyond.
Mhm,
So we need the large EMDs. There's opportunity to be limited partnership if you gator wrestle with others and bring the money to the table. I send out an email when I do have an offering. We do the presentation of the offering memorandum, go over the details, the numbers, and everything. And
mhm.
if you come in, you have an opportunity to be paid at closing, quarterly, and a share in the profit. So it's a great opportunity to build substantial wealth.
Mhm.
These deals will probably be one or two a year. They don't come every week, so
Yeah.
don't hold your breath. So when they do come along, it's a window of opportunity. We need to be ready to pull the trigger to take part, as it were.
Mhm.
So my main job is capital raise. So that's what Rang May is through your story. You have people who are frustrated. They've got money in the bank. When the guys are like that, they're frustrated when they look at their bank account. They're not happy to see $1 million sitting in the bank doing nothing. They've tried, and maybe they've tried in the past putting in the stock market and have lost money that way. Maybe
Mhm.
the timing's been bad, and they want to save for investment, and yet they don't know how to deploy it.
Right.
So, this is an opportunity you can present to them if you hear anybody ever talking like that.
Mhm.
Expressing those sentiments of wanted to deploy the money, make the money work harder, but they just don't have the time to do the research. You could invite them along to the Zoom call, and if they join, you would get reward, paid as a connector. Or
Mhm.
you could join with them, which most people do actually. They join with them, they JV with them, they have an agreement. You come in as a limited partner, and that way you get paid at closing, quarterly distributions, and a share in the equity. So you benefit from coming in. It's
Mhm.
cutting yourself into the deal, as Pace talks about.
Exactly. Yeah. Yeah.
Yeah, yeah.
Graham, how many large multifamilies have you gotten across your desk and are in the process of looking at right now, and or completed at this point? I know I saw your video. You just kind of pivoted into this larger
That's
multifamily
right. Yeah.
space
So I haven't
recently.
actually got anything to close yet.
Okay.
I'm looking every day at them.
Mhm.
It's a long process, as you can
Sure.
imagine, as in with any large niche, the rare ones come along because
Hmm.
we're looking for value add. We're looking for C-class building in a B-class location. And there's a lot of criteria with that. So what I've done recently as well is restart my YouTube channel with an educational thread there. So I would encourage you to come and join the YouTube channel. I post these interviews on the channel so you can get to know who else is in the community.
Gotcha. Yeah.
And, so you can see and network with each other and things like that. So it will save you time, as it
Mhm.
were,
Yeah.
in that
Yeah.
sense.
Absolutely.
And if you make comments and things, that helps me generate ideas for the educational thread. And so, building our community, we're ready then to take advantage of any opportunity that comes along. I'm
Sounds great.
also in support of that YouTube channel. I'm going to be writing a book that'll come out by the end of the year, demystifying commercial real estate, investing in multifamilies. So that will help support the community as well.
That's
Um,
great.
if you like, Stuart, I'd like to just send you the YouTube channel link, and let me just find that for you. And if you feel so inclined, you can um, subscribe and like the videos and give me any feedback. Let me put
Hmm.
that in the chat for you. And the nice thing about the large multifamily space is that it's safer than the smaller ones. Why is it safer? It's because the larger teams with
This is Graham Norris.
there we go, you
Welcome
found
to
it. I
the
can hear it.
Yeah.
Yeah,
Sorry about that. I just
that's all
pulled it
right.
up so I could have it, and I didn't know it was going to start playing.
I know that's an introductory video, but
Yeah.
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 So with larger multifamilies, it's safer because you need what's called a sponsor. A sponsor is somebody experienced in the same asset class,
Yeah.
and has that net worth. So it's a bit like, for instance, to put names on it, like Pace Morby.
Hmm.
He could well be a sponsor because he's got the asset classes and the net worth, and
Sure. Yeah.
there's
Hmm.
that liquidity. Vina Jetty and people like that are in this space. And I think Pace recently did a video where he shows a breakdown of large multifamilies owns versus the single family, and it's predominantly large multifamily. This is how you create real wealth,
Sure. Yeah.
and with plenty of opportunity. So, do you have any questions for me on that?
No, not on that. Again, sounds like you need large EMD once or twice a year. You also need looking for sponsors to help you within your large multifamily as well. Those it seems like to be your biggest needs at this point. Your class of building you're looking for C classes in the B neighborhood, so you can add value, whether it be increasing the actual rents by improving the properties themselves, or
That's
and
right.
other areas of adding value to those properties and to get
Yeah.
more, to get more
Yes,
out of it as well.
that's
Yep.
exactly right, Stu. Yeah, and
Yeah.
I go into a little bit more detail on what
Mhm.
we're looking for on the educational things. Like I'm doing the DSCR today. I'm going to publish a video on that. The importance of that role. So I've done each of the components, what we look for. The value add, which is, as you say, raising the rents to fair market value. We like to start off with occupancy ranging from 70 to 85. So it's on going, there's too much vacancy there, so we can renovate those units and then get them rented out full market value. So we call that the stabilization period,
Mhm.
where we
Yeah.
stabilize it and immediately start adding in value for
Right.
investors. So yeah.
Excellent.
Any other questions?
Yeah. So as you're working through this multifamily, are you doing any PML lending while you find those two deals that you're looking for in the year to
Yeah.
kind of keep yourself moving in that direction?
Yeah, we do. And I can give you, obviously, there've got to be deals, and there's not many deals out there.
No, no, exactly right. As
If
we're
you,
all
if
finding
you,
out.
I'm very strict underwriter, as it were. Been doing this game for a while, so um, a lot of people are going to be caught very on the wrong side of the fence very shortly if they're not careful and don't do the underwriting correctly.
Hmm.
Because we are entering a recession. The government have been too late to put the brakes on with the regards to interest rates. So that's only my opinion, but we'll
Yeah.
see. We'll see.
Yeah.
Yeah.
So that's your email address to send you the information. What is your criteria before, so I don't waste your time with anything. What is what's your loan to value to ARV? Is it only single family? Are you doing fix and flips up to 6 months? What is your
It's a
minimum
moving
return?
target, depending on the macro and the minor market, what's happening in the minor markets. Things
Mhm.
numbers vary when it regards to that because the PML is flexible, not like a HML. Although HMLs do pull the levers from time to time when the market does change, but
Yeah.
also for PML. So it's got to be clearly a deal that does make sense, where there is opportunity. The PMLs need to be safe. I prefer to be in first position,
Okay.
but second position I'll consider if there's clearly a lot of equity in the property after a would-be fire sale. So the numbers have to be low, especially if the opportunity has been a foreclosure. I need to clearly see that it's below the subdivision range,
Mhm.
when it comes to that price.
So you're looking for the loan to cost to be right around that 70%, 75% LTV of the ARV for all in terms of the acquisition, rehab, and interest payments back to the HML and the PML?
Well, the 70% you mentioned is not nationwide. It would
Mm,
depend on the market, and I would
correct. It would
consider
be
that.
specific to the actual, it
Yeah.
would be specific to that neighborhood. Yeah.
Yes, and whether the market's going up or down. Each market is different, so
Correct.
I've got analysis to look at that. So I don't quote numbers. You'll not see people who've been in this game a while quote numbers like that. We look at all the things. We look at the whole system and what's going on in that market.
Hmm.
You can be
So
caught
yeah,
out if you don't do that. Yeah.
right. So I'm referencing the local market itself.
Yeah.
So based on local market itself, you're gonna look at the deal and you're just gonna analyze that. You're not gonna say, hey, if within this market, based on the estimated ARV of the property, you're not gonna say, generally speaking, I want it to be at below 70% of the projected ARV. You're gonna look at it per market conditions, but you're
I
not
am.
gonna, but
Yeah. Like
but
in
there's
that
you don't have a
subdivision,
generalization that you
right.
use to start off with, is what I'm saying.
Yeah, yeah. So I look at the area, look at why you think this is a good deal.
Hmm.
Look at that. I also look at if it's a foreclosure, for example, how many foreclosures in that subdivision?
Right.
For example, and things like
Yeah.
that.
Hmm.
What are the city plans? Are they going to put a major road right next to this subdivision where there wasn't one before,
Yeah, exactly. I gotcha.
Yeah,
Okay.
yeah.
What's your time frame in terms of review and due diligence before the close of escrow? How many days or so do you need to review to see if it's a deal for you or not?
I've got the 72 hours. If you're more of a
Okay.
hurry than that, then that's a red flag.
No, I wasn't even thinking that long. I was thinking longer than that. So 72 hours is actually pretty short, which is fantastic. I was thinking similarly closer to, a little bit longer than that. So
Yeah, I'd
that's fine.
like longer. I'd
Yeah.
like
The
longer. There's
72 is your minimum
minimum.
mark.
Yeah,
Yeah,
yeah.
gotcha.
It's
Okay.
a red flag if it's less than that. It means
Understood.
the
Yeah.
person's panicking, trying
Mhm.
everybody said no.
Yeah, exactly right. Yep.
Yes.
No, I understand.
Yeah.
And in terms of first position leans, is there a cap that you want to be at based on your comfort level and your total portfolio and what you have available?
Okay. Well, yeah, 70, it's rare that it would do above 70% if unless it's a raging seller's market,
No, I'm sorry, of your total money into the deal. So you said you
Oh,
prefer
I
first
see.
position, but you can do second.
Oh,
So if
that
you're first,
varies a lot. Yeah, depending on how much money I have to deploy,
right.
yeah. Yeah.
So is there a max that you don't want to be over leveraged or overexposed? Like say for instance,
Yeah.
150,000, you're not going to go above that anyway, right? Or
Right,
whatever
right.
the
When
case
it
may be.
goes, yeah, that's right. The more it goes above 50, the more I look at loss of opportunity, and the better the deal has to be, and the shorter the time period that money is out there. So,
Mhm.
um, I, it's not about the money so much; it's more about the loss of opportunity and what
Got it.
makes sense, you know.
Mhm.
So, like I had one the other day. He wanted 80,000. I said, "There's lots of opportunity with this, you know. Better opportunities out there than that, you know." So, and he appreciated that. He understood that. So.
Was the 82 low for you?
No, it was on the loss of opportunity side, you know, when you do chunks. When you gate, if you listen with true gate is looking for little in, much out. So
Mhm. Sure.
that's what chomp chomp, you know.
No,
And
I'm well aware of the slogan or the motto, right? But
yeah,
again, not all PMLs are the same, right? So that's why I'm just
right,
trying to get a better idea of, okay,
right.
one is, okay, what money in for you and what is your expectation in terms of, if you're in first position, what is your expectation for your return and for your loss, for your opportunity with that.
Yeah, yeah. Uh, it's not the main game for me, as I say. The main game is large multifamilies with the large PMLs,
Mhm.
with the large sorry, AMDs.
Yeah.
And because I'm looking for LPs, I'm ideally looking for accredited investors. As I say, those professionals around you on your W-2 there, you know.
Hmm.
I mean, they have usually too much money in the bank, as I say. They don't like it. And they say it's doing nothing, and they like the number in the bank itself, but they know they're losing money by leaving it there like that in the bank.
Yep.
Yeah, yeah,
Sounds good.
yeah.
All right, my friend. Listen, thank you so much for your time. I really
Well,
appreciate it.
yeah. Thank you, Stuart. Yeah, thank you for your questions. I really appreciate that. If you would like to ask me more questions or another time, just book another call with me. I'll
Sounds
come.
great. Thank you. Have a great one.
You too. Bye bye
All
for
right.
now.
Bye-bye.
Thank you.